For a high-earning professional, your ability to generate an income is the foundational asset that funds every single investment, property, and plan you own. If a medical event suddenly halts that earning power, the entire compounding engine of your wealth stops with it. To protect that engine, professionals often turn to top-tier contracts, and MassMutual's Radius Choice policy is consistently on that shortlist. But disability insurance does not operate like an off-the-shelf product. It is a highly customizable, line-by-line legal contract. Relying on a brand name without understanding how your specific contract is configured leaves your income completely vulnerable. That vulnerability often starts with what we call the quote trap, a situation where a base policy appears highly competitive on price entirely because critical protections have been stripped out. This income protection matrix maps out how policies function. Career stage runs across the bottom. Customization required up the side. MassMutual Radius Choice plots in the top right. It covers a long career but demands maximum customization. The premium features medical and corporate professionals actually need from this policy do not come standard. You have to purchase them as separate, expensive add-on riders. To accurately judge if this policy is right for you, an independent expert must configure exact riders and pit the total cost against the broader market. Comparing a bare-bones Radius Choice quote to a fully loaded competitor policy creates a false price comparison, costs you thousands of dollars, and ruins your future claim. Under the base Radius Choice contract, 3 strict criteria must be met: unable to do your job, under a doctor's care, and not working in any other occupation. That third condition creates massive exposure for specialized professionals. If a surgeon permanently injures their hand and takes a lucrative job consulting for a medical device company, their disability checks stop entirely under that base contract. The solution is the own occupation rider. This is a specific premium add-on that removes the restriction on other work. With this rider attached, your disability benefits continue to pay out, even if you pivot into an entirely new, highly compensated career field. If your current income relies on a narrow, hard-won physical skill set or credential, purchasing the own occupation rider is mandatory. You cannot afford to skip it. Total incapacitation is what people picture when they buy these policies. Statistically, most disability scenarios actually involve a partial loss of capacity, like working reduced billable hours while dealing with an illness. A naked Radius Choice policy completely ignores that reality. Without specific riders attached, it pays out absolutely nothing for a partial disability. MassMutual offers partial disability riders to fill this exact gap, measuring your lost income or time and paying out accordingly. These riders protect your balance sheet during a slow, months-long physical recovery back to full-time work, keeping money flowing while your billing catches up. If your income tracks your direct physical output, procedures, or billable hours, declining partial coverage to save on your monthly premium is a disastrous trade-off. Where MassMutual Radius Choice genuinely leads the market is in its duration. The policy offers conditional renewal all the way up to age 75. That extended runway is rare. For late career professionals who plan to practice well into their 70s, this is the strongest argument for choosing the contract. Radius Choice is a participating policy, meaning it is eligible to receive non-guaranteed cash dividends from the carrier. But beware the marketing illusion. Illustrations often subtract projected dividends to make quotes look cheaper on paper, but those payments are completely subject to change. You should evaluate the policy solely on its gross premium and the actual contract language guarantees. Dividends provide a fantastic potential upside over a 30-year career, but you should never use them to rationalize paying a higher base premium against a competing carrier. The policy includes a highly unusual structural option, a massive 2-year waiting period before benefits kick in. Pushing the waiting period out to 730 days drastically lowers your individual premium. The strategic intent here is layering. You buy this delayed individual policy to sit perfectly on top of a robust employer-provided long-term disability plan that covers your first 2 years. But you must read your group certificate carefully. Many employer plans automatically switch to a harsh any occupation definition at exactly 24 months, right when your individual policy is supposed to take over. This maneuver is brilliant for an executive with flawless corporate coverage. But if your group plan weakens early, this setup creates a devastating gap in your income protection. This scorecard maps who Radius Choice fits. It suits residents with graded premiums, starting low and leveling at 50. It fits specialists working past 65 who value age 75 renewals. But it's wrong for price shoppers, since the base contract lacks own occupation and partial coverage. Radius Choice is a highly specialized tool. It requires precise application, not casual comparison. Buying complex disability insurance through a captive agent who is only allowed to sell you one brand creates a clear conflict of interest. That is why working with an independent firm like Diversified Insurance Brokers matters. They are a family-owned fiduciary agency. They do not push a single brand. They evaluate your career, build the exact rider configuration you need, and force over 100 top-rated carriers to compete for your business. Reach out to the underwriting team at Diversified Insurance Brokers to get a custom, honest second opinion on your income protection strategy. Having a fiduciary evaluate the fine print is the surest way to guarantee your income armor holds up when your livelihood is on the line.